successful traders I have met have very simple strategies, but they are very, very aware about their psychology. So you have to understand that success in trading is not about what kind of strategy you're using. It's important, yes, but what will really tell if you are going to be successful or not is your psychology. If you don't have psychology, you will not succeed. So it's very, very important. So basically, my strategy I used was as I said, very simple stuff. I traded basically structure and very simple formations, and I combined it with a fundamental analysis. For example, if the fundamentals told me that maybe we'll see some action in the Japanese yen, maybe it will get stronger, I will then use my technical analysis to kind of time where I'm going to go in the market and when I will go out of the market. And what I use very often is double tops and double bottoms, and head and shoulder also. So just to show you an example, here is the New Zealand Japanese yen chart, the daily. And as you can see, in November 2016, we get like a top here. The market stops here. If you look left, look back, we see that the market have stopped here many times before. So we can say that in this area here, it's a very kind of strong resistance level. So if I were to trade back in November, I would look, when we get up here, I will look back and I can see that we have a lot of structure. We see here is some structure, and we see we have some structure here and here. So what I would do if we were at this level, I will basically look for a confirmation. I will look for the market to kind of go a bit down, so that the market shows me that it has found resistance, and I will place a stop loss and I take profits. And what's important about stop loss and take profits is the risk reward. Many people forget this. If you have a risk reward of 1 to 3, meaning you can, let's say you lose $1,000 but stand to gain $3,000. If you have a risk reward of 1 to 3, you can lose half your trades and still be profitable. So risk reward in trading is very, very important. The higher the risk reward, the better your chances. So my rule is try to have a 1 to 3 risk reward on every trade I take, because in trading you will lose a lot of times, and you have to lose. You will not succeed on every trade. So having a high risk reward is it's so important. So what I would do here is place a stop loss and place a take profit, and if I have a risk reward to 1 to 3, I will take the trade. And as you can see, the market goes quite down. Where does it go? It goes, look left, we see its structure here, so take profit would be somewhere in this area. As you can see, the market bounces. Where does it go? Go right in the resistance line again. And we look left, we see a lot of resistance there.
Haakon, sorry to interrupt. I just had Gerhard saying that he's having sound problems. I just want to check just once again if can anyone hear? Can everyone hear Haakon speaking? Sorry for this one once again. Okay, everyone is saying that they have no problem. So okay. I'm sorry for Gerhard. I'm going to try to work on it, and if not, this webinar is going to be it's being recorded, so everyone will be able to see it later if they having any problems at all. So sorry for the interruption. You can just proceed.
No problem. Yeah, so as you can see, the market bounces from this level. It goes right into the resistance again. And we see again, it's a lot of resistance in this area. And where does it go? It bounces back. It goes first, it goes to the previous support. It goes sideways and it breaks the support. We get a breakout and we just collapses down. And here you can see again, now in 2017, we go up, we go up. Where do we go? We go right into the resistance here, boom, and we just collapses again. So support and resistance is very powerful, but not many people teach you it. You can be a successful trader just by using support resistance. You don't need all this advanced stuff in technical analysis. What I also use is the RSI. It's basically show you that how overbought or how oversold the market is. What you can do is look for divergence on the RSI, meaning, for example, on this double top here, we see that the RSI on this top was about 90, and we see the RSI here was about 77. So what we have is a divergence, and you can say that the market is testing a resistance with less strength than before, and therefore it's possible it's possible it's higher odds for it to turn. So keep it simple. Don't buy strategies if someone tell you that they have this amazing technical strategy that costs this much money. It's 90% of cases it's just bullshit. Keep it very simple. It will it's very effective, and as I said, just look for the basic stuff. That's my tips. It will it's very powerful. So this is basically what I used at eToro. Very simple stuff, high risk reward, and very aware of my psychology in the markets. And what usually happens when you trade is that you have losing periods. And let's say you're trading and you lose 5 trades in a row and you become very upset. It's very normal. What many traders do is they start revenge trading, meaning they lost some money, they want to make that money back as quick as possible, so they start taking more and more risk just to make the money back. My tips is, when you're losing, you have to cut your position size, meaning when you're losing, you have to take less and less risk, because when you're in a losing period, your confidence is low, you're very emotional, and your decisions will not be as good as when you're winning. So it's a very good tip. When you're losing, stop trading altogether, or cut your position size and wait until you build up your confidence and get in a winning period again. It's very important. I've seen so many traders lose and blow their account because they started taking more and more risk when it was losing. So it's very important. Psychology is the secret to trading, and you have to keep your emotions in check. It's very important. And another thing I wanted to talk about is there is no such thing as a done deal in trading. Let's say that all the analysts you're following say that the euro will weaken, the technicals are saying the euro will weaken, and so on. You cannot risk too much on a single trade, because there are so many things, especially in Forex, that can move the market the opposite way. So you want to have kind of a limited risk on the trades you take as well. You don't want to risk too much. And for example, I try not to risk more than, let's say, 3% on each trade, and I try not to have too much, for example, too much exposure in dollar. So you have to be aware that you don't have too much exposure in a single currency. So in Forex, anything can happen. It's very important that you are able to take losses. Me today, I have a win ratio of about 60% or maybe 50 to 60, meaning I lose just about half of my trades. The reason why I'm profitable is because I have a high risk reward. And I know there are many traders out there who hate to take losses and try to just sit it out, meaning if the trade goes in minus, you just keep hanging on to it. You try to take more and more just to win it back. You just have to accept that losses is part of trading. Everyone take losses, and just accept it. And having a win ratio of 50 to 60% is very respectable. I know professional traders who trade very big volumes who have a win ratio of 40%. The reason why they are successful is because of the risk reward. So to summarize, keep it simple, the technicals. Be very aware of the psychology, have a high risk reward, and when you're losing, when you are upset, cut the position size or stop trading altogether. I think it's very important. So basically, this was my strategy at eToro. After eToro, I went on to work as a currency broker. Basically, I gave advice to my clients and executed trades on behalf of the clients. And I learned quite a lot as a broker, because I really got to see what kind of people succeed in trading and those people who are not succeeding. And it's my view that the more ego you have, the worse you will do in trading. For example, higher education in trading, let's say if you are an engineer or a professor, it's normally not an advantage in trading, because in trading you have to be wrong, you have to take losses, and people that are a bit arrogant or have ego usually have a hard time taking losses. So what they will do is they will hang on to losses, and they will eventually lose. So my experience as a broker was that psychology is really the key. People with less ego are the ones who succeed. If you're very arrogant, if you have an ego going into trading, you will probably not succeed. So you have to be very aware of your trading or your psychology. Another thing I wanted to talk briefly about is conflicts of interest in trading. The trading industry is very big. It's a lot of money involved, and the biggest players are the brokers. And brokers earn money on commissions and spread. So let's say if you have, if you're a broker and you have a client base of 1,000 traders, if those traders are trading long term and have very few trades, the broker wouldn't make as much money. If those traders are day trading or trading very short term, they will make much more money. So almost every broker will teach you short-term strategies in Forex trading. And to this day, I have met extremely few Forex traders who are successful day traders. It's very difficult. In Forex, there's a lot of noise in the market, meaning that there are just random movements happening all the time. My advice to you is, if you want to succeed, you shouldn't day trade Forex. You should have a longer term approach. As I said, I have seen extremely few successful day traders in Forex. It's usually a waste of time. You will have more odds of succeeding by having a longer term approach. And if you're day trading Forex, you are just you get into the noise of the market, meaning you just get caught up in random movements all the time. So stop day trading, have a longer term approach, and you will basically increase your odds right away. I usually just look at the daily charts and the 4-hour charts and the weekly charts. I see some traders trading on the 5-minute chart, 1-minute chart. It's the brokers who tell people to day trade. It's not a strategy that will help you in the long run. So again, my advice: stop day trading Forex. I will almost guarantee that you will not be successful doing it. Keep a longer term approach, and you will have a much better chance of succeeding. And don't take advice from brokers, and don't take education from brokers. They usually just teach you short-term technical analysis and short-term strategies, and the reason why they're doing it is just to make more money of you. So be aware of the conflict of interest. Know that the broker wants you to day trade. He will send you market updates each day. So stop day trading and keep a longer term approach.
Haakon, I just had a question from David asking you if you could tell him how to calculate the risk reward. Could you show this on the chart, perhaps, in front of you?
Yep.
Okay.
No problem. So the platform I use for technical analysis is called TradingView. It's very good. It's free. It's very good. So when I going to calculate my risk reward, what I do, I go in the sidebar here. I click on this. For example, if I'm going to take a short position in the New Zealand dollar, Japanese yen, I would click on my entry, which can be here, for example. I will take my stop loss. For example, let's say if I stop loss here, and I have my take profit around here. So I just basically move this, and I see here now risk reward ratio 5.69, and if I move it, you see that the risk reward is changing. So the way I do it is basically to use TradingView and use basically this module that does it for you. But you can calculate it yourself as well. For example, if you have a stop loss of 40 pips, in order to have a risk reward of 1 to 3, you need a take profit at 120 pips. But the way I like to do it is use TradingView and just use this module and draw it in the chart directly.
Yes, David asked, so is it the tops and the bottoms that decides? I'm not sure I understand this question, David. What do you mean by that? It's like when you take a trade, you have a stop loss and you have a take profit. You have a target. So it's like the ratio between those two. This is what the risk reward is. So,
yeah, basically.
Yeah. So I'm not sure about the question from David here. If you would like to elaborate, David, then please. How do you decide how many dollars? David asks.
It kind of depends. For example, if I have a risk of $2,000, or it depends on the trading account. Usually, I don't want to risk more than maybe 2 or 3% of my account, maybe less on each trade. So it's all kind of proportional to what trading account you have. If you have a trading account of $100,000, I would not risk more than 2,000 or 3,000 on each trade, maybe less, maybe 1,000. So it's proportional. How many dollars you risk is proportional on your trading accounts.
Good, and so I can also say to David and anyone else that we made this ebook, which is part of the copy trading program, so you can read that. It's 40 pages and it covers a lot of the basic things about trading. So just so you know, read the ebook as well if you didn't do it already, because it really has a lot of answers in there. Alan, he asks, do you define your target when you enter the position, or do you let it run and adjust the stop?
Good question. I usually have an idea where my target is when I place a trade. If I get a good movement in my direction right away, I will in most cases adjust my stop loss in break even, so my risk is basically taken out. And it kind of depends, but I usually move my stop loss in my direction. I never move it against my direction, meaning moving stop loss further in minus. I move it with my trade. So also, if I see that the market is closing to my take profit and it kind of goes sideways for some time, I may move the stop loss almost to the take profit. So usually I have a take profit when I place a trade, but if there are circumstances that happen along the way, I will move the stop loss. Yeah.
Perfect. So yeah, no more questions for now.
All right, excellent. So what I wanted to talk about now is a very, very powerful Forex tool that probably not many traders use. I was really surprised when I learned about it, how many traders not use this tool. It's very powerful. It's called the COT indicator, and it's based on what's called the CFTC Net Traders Report that is released each Friday in the US. What this is basically a report that tells how different groups in the future markets are what kind of positions they are holding. And there are basically three groups. They are called commercials, which are big, corporations like Apple, Apple, Statoil. They are basically people who use the Forex market to protect themselves. They are hedging cash positions. So they are not in the market to make money, but they are in the Forex market to hedge positions or hedge their cash. They are not trading for profits. And we have what's called the non-commercials, which are basically big traders like hedge funds, institutions, some banks. They are in the market for profit. They are trading using the Forex market to make a profit, and therefore they are affected by their emotions, and they are affected by greed and fear. The last group is what's called the speculators. It's retail traders like us. We're not that big of a group, but we are included in this report. So this is the website of the US Commodity Future Trading Commission. Each Friday, they publish what's called the COT report. For example, here you see current traders in financial futures report. When you click on this one, you get a lot of numbers. So this is the report, and I will take a bit more, a better view here. This is what the report will look like. And as I said, this is futures, not spot Forex, but it gives a very good overview anyway. So here we see the Euro Forex, and we see non-commercials, which are the big traders. Here we see the commercials, which are the institutions and corporations, and the non-reportable positions are speculators, us. So based on, if you look back in history, you will see on big trends in the market, you will see that the commercials usually are on the right side of the market, while the non-commercials usually are on the wrong side. Also the speculators, also the wrong side. So, in big trends, the commercials usually are on the right direction of the trend. So the trick about this, COT report is to look for what's called divergence, meaning big differences between the commercials and the non-commercials. If, for instance, the commercials are very heavy long, while the non-commercials are very heavy short, we have a big divergence. You want to trade with the commercials because, as I said, they are not trading the Forex market to make a profit. They have usually very good, they usually know what the fair value of a currency is. And, they, as I said, they tend to be right on big trends. Non-commercials, they are affected by greed, fear, emotions, and, they tend to lose. I don't know if anybody or everybody knows this, but about 95% of Forex traders lose money. About 5% only make money in Forex. It's been this way for many, many years. It will be this way for many, many years to come. So it's very hard to be successful long term. So, just trading with the commercials, which are called the smart money, will give you a big advantage. And here you can see that non-commercials, they have about 101,000 contracts long. They have 123,000 contracts shorts. So all in all, they are short about 22,000, you can see. So they are short, we see at the commercials here. They are long 181,000. They are short 152,000. So all in all, they are long about 30 or something. So we have commercials are long, non-commercials are short all in all. This, if you're going to use this report each Friday, it will take a lot of time. So a website that I recommend is called cotbase.com. And here basically you have an indicator. And for example, if I click on the Japanese yen here, I can see that the commercials are the red line here. The small speculators, retail traders are the blue line. And the large speculators, hedge funds, and the banks are the green line. So just to give you an example, here we see a big fall here in the Japanese yen. The commercials are short the markets, while the large speculators, non-commercials, are long the markets. So the large speculators lost quite a lot of money here, while the non-commercials was on the right side of the market. And at this point, you see here, we have a big divergence as well. It's a big difference between them. And what happens? Boom, 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 boom. We go down really hard. So just an example, and we go down a lot. And about here, the commercials start buying. You see here, the commercials are getting long, while the large speculators, banks, are going short. And here you see again big divergence between the two. What happens? The market goes and goes up. So again, commercials, the right side of the markets. The large speculators or non-commercials are the wrong side of the market. And you can see that it have been trending quite good upwards, and the commercials are still on the right side, while the non-commercials are still on the wrong side. And for example, so I can give another example on the, let's see, Australian dollar, for example. Okay, it was, here we go. Here again, we see, for example, here, we have this big trend down here. It's a pretty, big move. You see again, commercials, they are shorter market, perfect, and the large speculators are long the market. So again, commercials, the right side, non-commercials, wrong side. And you can see that they changed their position share. Here, here we see like a big, we see a small change. The commercials are going long here at the bottom. We get a good move up, while the non-commercials are going a bit short. So again, we see that the commercials are on the big trends. They are on the right side of the market, and the non-commercials are usually on the wrong side of big trends. So the big question is, how do you kind of calculate what's a good divergence? Because you want to have a big divergence as possible. I usually say that anything over 10 in divergence is a good potential trade. So what I personally use is a spreadsheet, which I basically each Friday I put in the values that it takes like 15 minutes or something. I put in the numbers from the report, and it gives me the divergence on each currency pair. So for example, this I haven't updated this in like 2 weeks now, but as you can see, the New Zealand JPY, they had a divergence of 14.9, which is quite well. It's a lot over 10. What happened with the New Zealand dollar about 2 weeks ago? You can see it here, boom. So the commercials was right again. The non-commercials was on the wrong side on this move. And you cannot use this COT alone. You have to use it with technical analysis as well. So 2 weeks ago, as I showed you, we had a divergence of 15, which is pretty high. 2 weeks ago, we was at these levels. You can see we have a resistance area. Market has tested the resistance many times. And in addition, we have a high divergence in the COT. Commercials are heavy short, the non-commercials are long. So for me, it was a perfect trade to go short here. Everything is, correct. Technicals are correct. The COT is telling me that the smart money is heavy short. So for me, it was a good trade to go short here. And as you can see, we fell down quite hard. And again, commercials made money, or they was on the right side, but the non-commercials lost money. So if you're interested in this Excel file, you can send me an email and I will forward it to you. It's a good tool, very easy to kind of get divergence very quick. Or you can use the cotbase.com, which is this site. If you want, I don't recommend reading all this. It's too much work. So the best way is to use the COT base or get the Excel file. So again, if you want the Excel file, send me an email and I will forward it to you. I know some are wondering what my strategy is today, it's basically the same as eToro, just I use the COT much more. Again, it's a lot of focus on psychology, risk reward, and I noticed right away when I also started using the COT, my profit increased that much more. So it's a very powerful tool. As I said, not many people use this. Very few people use this, especially I know some in the US. It's more traders use it than in Europe, for example. The traders I speak with in Norway, almost zero use it, and some traders from the UK, almost very few use it. So it's kind of I don't want to say a secret, but it's something that very few people use, which is kind of surprising, but it's very powerful and it's free. I have you will see as a trader that a lot of people try to sell you stuff, want to sell you an indicator, want to sell you an expert advisor or so on. In 95% of cases, it's not worth it. The best tools are for free, so you shouldn't be buying anything really. As I said, keep the technicals very simple, and if you use the COT as I showed you, I think you will have a good chance of succeeding. And as I said, day trading in Forex, 95% of cases is waste of time. You will not succeed by doing it. As I said, very few people manage to do it. You can spend 8 hours every day trading and sit in front of a screen, or you can use 1 hour or 30 minutes every day trading, swing trading, position trading, and make as much percentage gain. So, it's my advice to you is, if you're day trading, stop it, have a longer term approach to it, and you will increase your odds right away.
Great advice, Haakon, and I have people have a lot of questions for you now. So I think this was something that was really popular, and I think, as I said when I spoke before, this is not something that we have been aware of, this indicator, and not many people use it in Denmark, I'm sure. So I would like to ask you, is it possible that we could just, I could write a short article and we could publish it on the website and send it out to those guys, because everyone seems to want to have this Excel spreadsheet. So I think we should just maybe publish it, if you don't mind.
No problem. And it's I can show you. I have a kind of international website which is called K2trading.net. I have an article there on English if you're interested. It's it's not that detailed. It's just give it an overview, but I can definitely write an article that goes in depth into this indicator, and basically show you how to use it, optimal. So as I said, I highly recommend you start using it. As I said, very few people use it. Those I know who use it usually make quite a lot of money. Very powerful.
So I think this tip alone made it worth logging into the webinar tonight, I think, for most people. Anyway, I think I would like to take a few questions, if it's okay with you.
Yeah, no problem.
A lot of people is asking about, can these COT reports be used in all markets? Like, do you have this for the DAX and the FTSE as well, or is it only the Forex market?
I think I think there are reports on DAX futures, but the thing is, the commercials are not trading the DAX. Those who trade the DAX are people who are trading for financial profit. The COT is best used with Forex. So my recommendation is use this indicator just for Forex. I haven't had any experience with other futures, but you know, I don't know how it will work, but I know that it worked best with Forex. But I can look into it, but I don't think it have any value on other futures like the DAX, because those who trade DAX are just trading for financial profit. You don't have the commercials into DAX, for example.
No, that makes sense. And if you know that it works pretty well for the Forex, I think people should maybe try to look into that. So that sounds like a good idea. Peter's asking, which kind of asset classes do you trade, or do you limit yourself to few asset classes? But it seems like you're trading mostly Forex, right?
Yeah, I trade 99% Forex.
Yeah.
You know, I traded stocks before, but you know, it's Forex. Forex is the market I find most interesting, and therefore I just traded Forex basically. So I don't have that much experience with other markets. I'm basically just specialized myself into Forex.
Okay. Nils had a question about your RSI. He said it's set to 9 periods. This is a bit technical for some people if they don't know the RSI, but the standard in the TradingView is 14. Do you have any explanation for this?
Yeah. Basically, when I, you know, the RSI is basically like, I usually had it at 7 actually, but what it means is if the RSI is at 7, it calculates the 7 last bars. So what I learned early on is to have 7. I learned it from a guy, which is therefore I always use 7. But something I struggled with in the beginning was I usually went too early into trades, meaning I went into a trade and it will go against me for some time before it eventually turned around. And the way I kind of battled that problem was increasing the RSI to 9, because when I have it on 9, it will get it will take longer before it moves into oversold and overbought and oversold. And as you can see, I have 80 on overbought and 20 on oversold. The default is most people use is 70 and 30, but I want to trade at levels that are extremely overbought or extremely oversold. Therefore, I have increased it to 80 and 20. So, you know, for me, it doesn't need to be an advantage. It's just my personal preference, really. But you know, if you use the RSI today, I would recommend to change the values to 80 and 20 here, because you get more extreme positions then, and you really want to trade the extreme scenarios. Here you can see this extreme. We are at 84. It's above the overbought level here, and you can see we just collapses. So, you know, as I said, just personal preference for me, really.
Okay, Leonard asked specifically about the euro dollar. I thought maybe would it be an idea to take a current example to let us know how you see, just as an example, how would you analyze something like the euro dollar at this point?
Yeah, no problem. So you know, I'm actually in the euro dollar right now. I'm short at, I think it's 120 or something, 120.20. It's you know, I have taken you know, the dollar has been very difficult for me this summer. As you can see, we Since basically 2015, we have traded in a range between 115, about 105, 103, and we're going sideways for over 2 years now. Here is basically the Trump election. We go down to 103. After the election, we see that it just, the euro dollar just rallies. So, if you look at the weekly chart, we see that it's very, very overbought. The interest rate differential between the US and the Eurozone, there are higher rates in the US. The economy goes better in the US. So I was actually surprised that we actually broke this resistance line and went all the way up here. At these levels, the Eurozone is basically hurting right about now, because this is basically an increase of almost 20%, and it really hurts the export of the Eurozone. So the central bank in the Eurozone, the ECB, really don't like it this strong. So it's in their interest to kind of weaken the euro. If we look at we can look at the COT also. We can click at let's see, the dollar index. We see that not much happening. Commercials have been short for a very, very long time. You see that commercials again is been on the right side of the market. You see that the non-commercials have been long for a long time now. You can see that they've been on the wrong side of the market. So commercials have been right, non-commercials been wrong again. So what I basically see here now is they are basically at break even. What I suspect will happen now is the commercials will go into longs again, and the non-commercials will go into shorts. So it's not much happening on the COT really. On the euro, you see the commercials have is really short now, and the non-commercials are really long the euro. So the divergence between the USD and euro isn't that high yet, but I see good potential now that the commercials will go into the dollar, and we will get a big divergence between the two. And what people also must remember is that dollar is a safe haven currency, meaning if the market were to become nervous or the stock market will correct itself, the Japanese yen will first of all become stronger, but the dollar will usually also get stronger. So looking at the euro dollar now, I went short about here. I was taken out on stop loss, but I'm in it again now, just because I look back, I look left, I look back, and I see here we have a lot of structure here. We have structure here, 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 here. And I see now we're here. And what happens? The market finds some resistance, and I suspect that in the coming weeks, the commercials will start buying the dollar again, and we will go down to this level. This is the next kind of support or structural level. We'll go down here. I think we will break it, and we'll go down to 112. What happens here? We may have a correction, for example, like here. So basically what I think the next move is here. We may stop here a bit on this structural level. We may go sideways. I suspect we'll break it just because the commercials will start buying again. When we get down here, let's see, I think we'll break this one as well. Let's see. So probably either we get a small correction. If we get down here, we'll probably go up here again and test it. And if we break this, its next stop is here. So overall, I look to get, I'm short euro dollar. I think we will go down, in the coming weeks, we will get down to 115. I think we'll break it, 112, maybe go sideways, maybe correct up to 115 again. So my targets are basically this 112. This is my target, and target. So my position I have taken now, when we get down here, I will take out half the profits. If we get up here again, I will add to the position again. If we break here and go directly down here, I will take all my profit at this level. What almost every trader struggle with, me included, is holding on to profit. It's very hard to, once you have a good profit, it's very hard to kind of hold it and be patient with it. It's very hard. So my way to kind of deal with that is that when I reach, I have two targets usually. When I get the first target, I take out half my profits and let the other half be in the market. If we go down to my second target, if we correct, I will add again to the position here. So in summary, I suspect a big correction to the downside on the euro dollar.
And when you see this the sign like the divergence in the COT indicator, how long a time horizon do you usually see for those kind of trades? Like how long time do you expect to hold a position usually, or how long time do you hold your positions?
Yeah, one important thing about the COT is you have to be very patient about it. Usually, the commercials, let's say if the commercials, they may start buying like crazy now, and we get a big divergence, but the market still goes sideways or a bit up. So when you use the COT, it's important to have in mind that it may take some time before the effect really goes into play. But I usually have a time horizon of maybe 2 weeks to 2 months. As I said, don't day trade, have a longer term approach. It will increase your odds. So, COT indicator is, you have to have a big perspective on your trade. You cannot use this with day trading. It will not work. So you have to have a good time horizon. So best maybe 1 month. I think if you get a big divergence, like 2 weeks ago, we see that divergence on the New Zealand JPY here. We see 15, and we see here 2 weeks ago, you see that the market immediately went down. So if this movement right here is about 2 weeks maybe, and down here is maybe 3 weeks or something. So if you want to be in the trends of these kinds of movements, you have to have some patience. But as I said, use it with technical analysis. Here is the reason I went short is basically I see that the commercials are heavy short now, the euro, and the commercials are probably going to, they are taking out a lot of short in the dollar, and they may go into long. So combined with the technical analysis, I thought it was a good point to go short. So yeah.
In the report, there was something called spreads. Niklas was asking what that is. Could you explain that? Does it matter?
Let's see, spreads. Let's see if I find the. Let's see.
Long short spreading, it says there. I think this is what he was referring to. I'm not sure, or maybe in the smaller, there was a smaller report.
Yeah. Let's see if I find it there. Here we go.
Yeah,
Let's
exactly.
see. Let's see. I have it written down somewhere here. Let's see if I can find it here. I don't remember, like, I can check it out, but I don't remember right away. But spread this. Yeah, I will check it out, and I will. If he can send me an email about it, I will respond to him tonight. But I can't remember it right now. Let's see. Yeah.
Okay. I mean, the most important thing is to look at the long
Yes.
shorts for the non-commercials and commercials.
Yes.
So.
And you see that the spread is only on the non-commercials, but I will find it out, and I will get back to him about it.
Okay, the last question I have in this round is Morten is asking, do you have a stop loss on the euro dollar?
Yeah, I have. Let's see. I think it's about. I don't quite remember, but I think it's about 120. 21.30 or something, but I have a stop loss. It's always have a stop loss. And just a quick thing about stop losses. The market usually is attracted to round numbers, meaning if the market is trading, here we go, you see the top here is 120.75. In many cases, the market will be attracted to a round number, meaning the market will be attracted to 121 just because it's a round number. And if you have your stop loss at 121 exactly, or 121.05 or 121.10, you will many cases get taken out because you have a stop loss that close to a round number. So my tips when you place a stop loss, place it not place it where everyone else places it. In this case, you can see that I will probably guess that many people have their stop losses at 121 exactly, and in many cases the market will just test right above it and just go down afterwards. And it's not a good feeling when the market takes out your stop and it goes 2 pips over your stops, and then it just collapses the way you originally was positioned in the market. So place a stop loss like a hard place to get, and if you have like 121.30 or 121.50, you have a good distance between a round number, and it will, you will. In my experience, you will not be taken out that much if you place a stop loss at a round number.
Okay, that's perfect. We have 20 minutes left. I don't know, Haakon, is some other things you would like to teach us? I think we already learned a lot and have a lot to look at. Those of us who are trading, so it has been so far. It has been very instructive.
Well, I think I got covered the things I wanted to cover. Again, if you're interested in the Excel file, feel free to send me an email. I can briefly. My email is basically let's see here. This is my email, Haakon@k2trading.no. If you want the Excel file, if you have questions regarding the COT, send me an email. But I feel I covered the things I wanted to cover, and just to kind of summarize the important parts. If you're day trading and you're not successful, stop it and have a longer term approach. You will increase your odds, and also be very aware of the conflicts of interest in the market. As I said, brokers, they want you to day trade. They want you to trade short term just because they can make more money from you. So you want to have a longer term approach, especially in Forex, because the Forex market, it has a lot more noise than other markets, so it's more random movements in the Forex market. So when you're day trading the Forex, you have all these random movements, and day trading, as I said, very few people manage to do it. Keep it long term, you will increase your odds right away. Other than that, if anyone has any more questions, just ask me. But I feel I covered the topics I wanted to cover today.
Okay, and I can say, yeah, if you have more questions, then please write them now, because then we have a few minutes left here. But I can say that Haakon and I, we did talk before this webinar about having Haakon coming back for one more webinar later this autumn, perhaps. So, and I think it's going to be a free webinar. So just stay tuned for more information, because we have a lot of other interesting things to cover. And I think let's do some work on the COT indicator and see how we can use it in our own trading. I think it looks like it's really something that's worth looking at. I have a few last questions here for you, Haakon, which is coming in now. So Niels is asking, how do you see the divergence that you're talking about? What numbers are you looking at exactly?
Yeah. So the way I calculate the divergence is through the Excel file, and usually what most people are saying is if you have a divergence above 10, you have a good potential trade. So if I use the COT, I become interested when I see a really good divergence, preferably over if I get 15, which is very good, 12 is okay, 13 is okay. In some cases, for example, I know this report I think it's 2 weeks old or maybe 3 weeks, but I did the New Zealand Japanese yen a week ago or 2 weeks ago. It went from 14 to 21. So we had a really, really high divergence on the New Zealand JPY at 21. And as you can see, again, it's a big movement when that happened. So anything over 10, I think it's a good number.
Okay, Niels, so I hope this answered your question. Peter is asking, is RSI the principal technical indicator you use, or do you use other technical indicators?
I use mainly the RSI. I look more at the price action and the structure. I use the moving average as well, but many people probably disagree with me, but I think you don't need that much more than 1 or 2 indicators. If you have too much indicators, it will just confuse you. It will give all kinds of different signals. So it's just my personal preference to keep it very simple. So I use the RSI and I use the moving average sometimes. So it's nothing advanced stuff. It's just very simple stuff. But I pay most attention to the price action and the structure levels and the formations. For example, in TradingView, you can have like ABCD pattern or let's see, head and shoulders. Those are basically also I use sometimes, but it's very, very simple stuff. Nothing advanced really.
Alan is commenting that you have not displayed any use of trend lines. Is it something that you use?
Not really. it's I know many people who use it and have good experiences with it. It's just I've been trading just structure and so on, and I occasionally draw trend lines, but for me I haven't used it that much, but I definitely think it's a good tool to use as well. But just me personally, I haven't used it that much. But it's very important, of course, and it's a good tool. So it's just my my personal preference. I haven't used it that much.
I like your idea of keeping things simple. I think it's something that a lot of people can learn from. Jesper was asking, why are you not on eToro anymore?
Basically, as I said, like when I was trading, I got this job offer for a broker here in Norway, and according to the regulation in Norway, you cannot trade on your own and be a broker at the same time. So I decided to take that job offer, and therefore I had to quit eToro. So that was the reason I quit there. Today, if I want to, I can probably go back to eToro, but right now I'm so busy with my own company and so on. So maybe in the future I will get back on there again. But the real reason was due to the job offering, and I was really required to stop trading there.
Okay, Haakon, I think it has been a great inspiration to have you with us tonight, and I think from judging from the activity and the questions, and also from the feedback, one guy wrote that you were fantastic. So I think it's a very good feedback, and I hope the rest of you feel that you've gotten some really good inspiration. I know for myself that I'm going to check those reports, and when I'm trading Forex, I want to take a look at this indicator too, to find out how I can use it.